Hello, Joe here from ZB. Welcome to the latest Bitcoin market analysis. It's been an interesting start to the year for Bitcoin, and it's been an interesting week too. So we'll jump into what we've observed over the last week in the market. So at the macroeconomic level, there's clearly a relationship between the dollar index performance declining and Powell, the head of the Federal Reserve, his re-election hearing on what was a relatively moderate platform. However, the US 10-year TIPS is still rising, reflecting that the market's expectation for US inflation still remains high. Inflation expectations remaining high will strengthen the market's fear of the federal tightening, and short-term risk assets are still being suppressed by this factor. That's something that we're seeing quite prominently in the market at the moment. In terms of the fundamentals of Bitcoin, the unilateral downward trend of Bitcoin balances on exchanges has tended to ease recently, showing a trend of low volatility. So that volatility that we've been seeing over the last couple of weeks is starting to reduce a little bit. Market trading is still sluggish, however. The leverage ratio of exchange contracts is still high. In the short term, we need to be alert to the impact of contract liquidation on the market. It's something that we need to be keeping an eye on. Looking at the market outlook, because smart funds are still entering the market, the fundamentals have not deteriorated due to the external macro environment alone. Therefore, this report believes that the position should not be pessimistic when it comes to observing the Bitcoin market at the moment. We still maintain an optimistic view on the market outlook in the future. The short-term market is still affected by the external macro environment, especially the intensified expectations of the Federal Reserve to raise interest rates and shrink its balance sheet, which has led to a large number of liquidity-sensitive positions leaving the market, which has brought a certain amount of selling pressure. At present, the market is still in a weak bottoming state, and the open interest of futures contracts is relatively high, which is a big risk point in the current market. Historically, when the number of short-term holders in a profitable state is close to zero and the dormancy flow is at a lower position, it's usually a big bottom area. Therefore, we need to wait patiently for the market to complete its correction and bottom out. Since smart funds continue to enter the market, it just shows that the fundamentals have not deteriorated due to the external macro environment, so we shouldn't be pessimistic about this position at the moment. On the market outlook, still maintain an optimistic view. There's still potential there. From the technical point of view of the K-line, Bitcoin is still in the structure of the daily bottom line divergence. According to the Fibonacci retracement line segment, 44,000 is a relatively large resistance level. If the Bitcoin price had remained above 39,500, remember, trading can be risky. This is just our observations as a company, it's not our trading advice. Again, with trading, it holds great potential, but it can also carry significant losses. I know that the volatility has sort of reduced over the last week or so, but crypto markets are generally, by their very nature, quite volatile. So please take care when you trade. Make sure you know what you're trading with, what markets you're operating in.